space left on that drive. I have to probably stop the recording and record to a different drive. All right, so I mean, it seems like we're trying to see a little top in action. This thing's freaking done bulled its way up. Like, I'm red, dude. I'm like down on the day, bro. It looks like we may have put in a top up here. Hopefully we have. I don't like to operate off of hopium. Market's trying to bounce. And see, look, this is what I was trying to explain to you about why I like to trade meta. Look, the SPY and everything is like selling off and like red. It hasn't started bouncing yet, but meta is already bouncing. So remember when I was saying one of the reasons why I like to trade meta is because the swings give you more range, either to the downside or the upside, and sometimes it leads and sometimes it lags. And see, this is a prime example of it leading right now, because it's out ahead of the Qs and the SPY. So now when we see the Qs and the SPY catch up and start bouncing, then like we know meta's about to rip. And at this point, like if we don't top out here in the next few minutes, I'm gonna go ahead and close out the position. I'm just gonna have to eat the loss, because now, I mean, for the position, like even though I'm not at full size, I'm getting closer and closer to my max loss on a trade. That's concerning because I'm not even at full size. So that lets you know how long I let this trade run against me. Because again, I'm thinking logically, bro. We all know about logic. There is none in this market. I see the SPY, the Qs, Apple, like the leaders, seeming like they want to top out. But now I see the Qs bouncing and the SPY bouncing and Apple bouncing as well. But it was looking like it was topping out at the top of this range up here. So this new top here on the SPY, it's 371.75, 70s, and then on the Qs it's 273.90 or 95. On Apple it's 145.40, 145.40s. This is where seeing a little topping action at. The Qs are breaking above it, man. Like the Qs are in the 274 now. Apple's like running up. Dude. See, I gotta stop out. But god damn it, I know as soon as I stop out, that's when the logic's gonna come in. Look at this uptrend though. Dude. Look at this thing. I was on the wrong side of this one today, bro. Let me look at the SPY on the 5-minute. Damn, already had the Qs on the 5-minute. I thought I was watching the 2-minute. Yeah, this is one of those bullish days. I'm getting fucking killed right now, bro. I'm getting killed. At this point, like, it's too late to flip long, because I know the market's extended. So for you to be long biased today, it would have been better to be long biased off the open, or at least, again, and see, this is why I preach letting the range develop, because remember, I didn't let the range develop because I was thinking it was going to be one of those days where they showed us a quick top of the range and then we just sold off for the rest of the day. But under normal circumstances, I would have waited for the range to develop and then made my choice based off of that price action. But I anticipated, and at least I can put that in my notes now, that every time I anticipate a move, 9 times out of 10, it ends up going against me. So even though I'm in the red decent and it's looking like I got to stop out and take a loss, I still got some value out of this. And again, it's market tuition. That's how you have to look at it, especially if you're a newer trader. First of all, don't I would suggest that if you're just getting into the markets as a trader and you really want to take it serious, paper trade for a couple months. Actually, I wish I would have did that because I lost decent amount of money like that first year, especially. But the only thing that kind of saved me, because when I started, I didn't start paper trading. I started with real cash. And the only thing that saved me, even though I did take huge losses, especially day trading, I also, because when you first, begin your trading slash investing journey, you start off investing. So I was investing and kind of dibbling and dabbling in trading. And again, like I said, the only thing that saved me was when AMC was down at like $11, I loaded up on it. So, and this is before it squeezed up to 70. I was watching trades, and the thesis was sound. You feel me? So, like, I made bank off that move, and then, but unlike everyone else, I wasn't like in the position to try and teach Wall Street a lesson or whatever, or hodl for the cause. I was just in it potentially exclusively for the short squeeze. When I seen that thing squeeze up to like 70, I think I got out at 68, and I was loaded up. I mean, I wasn't loaded up, but I was loaded up for me as a beginner. I had more than hundreds of shares. I had over 1,000 shares, but I didn't hold all 1,000 all the way up to 60, up to 68. Like I was getting, like I was taking profits on the way up, but I still did have a decent amount when we short squeezed all the way up to the top. So basically, like I said all that to say that's one of the ways I was able to day trade and take losses, decent sized losses, but still never blow up because I was playing with house money. It was real money, but it was house money that I got off that AMC play. So I was able to use that as my market tuition over the last few years, but also still, have some good swing trades. After that, it wasn't all losses. Obviously, there was a time there where it was still okay to swing trade and buy some dips, but that time has come and gone now. People haven't come to that realization yet. They haven't capitulated yet. They haven't given up yet, and that's why you're seeing like these rallies still.